Assalamualikum OyaRahmatullahe OyaBarakatuhu. Welcome to my virtual classroom, MKA CLASSROOM. Now let's start today's video tutorial. Today we will start the valuation concept. The term value can mean different things to different people. So that's why what should be mean the valuation. The liquidation value versus going concern value. Liquidation value is the amount of money that could be released if an asset or a group of assets is sold separately from its operating organizations. That is a liquidation value. When you sell your asset, then that is called the liquidation value. This value is in marketed contrast to the going concern value of a firm. That means going concern value, the amount of a firm could be sold for as a continuing operating business. That is the going concern value. And another we will learn liquidation value. That means the amount of money that could be released if an asset or a group of assets sold separately from its operating organizations. This value, this liquid value can be marketed contrast is called the going concern value of a firm, which is the amount that the firm could be sold for its continuing operating business. So the firm's liquidation value will have a major role in determining the value of the firm's financial securities. Later on we will see book value versus market value. The book value of an asset is the accounting value of the asset. The book value of an asset is the accounting value of the asset. That means the asset cost minus its accumulated depreciation. Accounting value can be found the assets cost minus its accumulated depreciation. The book value of a firm, on the other hand, is equal to the dollar difference between firm's total assets and its liabilities and preferred stocks are listed in the balance sheet. So another way we can get the book value, total asset minus its liabilities and preferred stock. Then we can get the book value. The book value is based on historical value. It may bear little relationship to an asset's or firm's market value. In general, the market value of an asset is simply the market price. Simply the market price at which the asset trades in open marketplace. Market value is simply the market price of an asset which price is traded. For a firm, market value is often viewed as being the higher of the firm's liquidations or going concern value. After that, we will see market value versus intrinsic value. Market value, we know that the market price at which an asset trades, that is the market value. Here we have learned. Now is for intrinsic value. The price of a security what to have based on all factors varying on valuation. The intrinsic value of a share of a security, on the other hand, is what the price of a security should be if the properly priced based on all factors varying on the valuations. That means fair price, intrinsic value of a security, actually a security should be if the properly priced. Intrinsic value is the properly priced of a securities with considering all the variables or the factors of valuation. Assets, earnings, future, prospects, management, and so on should be considered for determining the value. In short, intrinsic value of a security is its economic value. If the markets are reasonably efficient or informed, the current market price of a security should be fluctuate closely around its intrinsic value. The valuation approaches taken in this chapter is one of determining a security's intrinsic value. So in this chapter basically we try to determine this intrinsic value of intrinsic value that will show in the valuation chapter. So intrinsic value. This value is the present value of cash flow stream provided to the investor and discounted at a rate of return appropriate for the risk involvement. With this general valuation concept in mind, we are now able to explore in more detail the valuation of a specific type of securities. So in this valuation concept we will try to determine different types of securities valuation, and all types of securities valuation should be in mind that we are going to determine the intrinsic value. Intrinsic value means where properly priced the security is with the considering all the factors. Where we are determining the present value of a cash flow streams of these securities, where we discounted our securities where risk is involved. That's our valuation concept. Actually we have to find out the intrinsic value or present value of our securities. This all about today. Stay home, stay safe. Assalamualaikum warahmatullahi wabarakatuhu.